Happy Thursday. What's going on, everyone? This is Pedro De Leon.
What up, y'all? This is Chihiro Kurokawa, and we are Beyond Stocks. We're two regular guys that are interested in and we invest in alternative investments. And so we're here to talk to you today about a very interesting article that JP Morgan recently published. And we're going to share that article with you, but we want to call out two themes in particular from that article that we thought really struck us both as investors. So yeah, Pedro, let's
Yeah.
get into it, man.
Yeah, definitely. So the first thing we're going to talk about is the actual real estate. There's a shortage as far as residential, but they also talk about the multifamily senior residential accommodations and workforce housing. So there's about 2 to 3 million homes that is estimated as far as shortages. And there's a lack of affordable housing within the US. So that's the overall thing that they're talking about. There's definitely opportunities to invest with developers that are developing in certain areas in the US.
Yeah.
So can you chime in a little bit more on the multifamily?
Yeah. Well, hold up. Let's talk about small businesses, right? Because you and
Yeah,
I,
that's right.
we try to be, involved in our community, which is McKinney, Texas, where you and I both live. And so we meet a lot of small business owners, right?
Mhm.
And one theme that both you and I have heard from small business owners is it's really difficult to find and to retain people for their businesses because their employees can't afford to live near or in McKinney. And so that's a
Yes.
big problem, right? So, what I always like to say is people love affordable housing and the idea of it as long as it's not in their backyard.
Yeah, that is so true. Yes.
Right. So, to take an extreme example, I've read about uh, especially in California, certain communities in California where homelessness is a big challenge, and everybody loves the idea of a homeless shelter until they realize there's one being planned half a mile or a quarter mile from their house, and then now they're against that idea, right? So
Right. Yeah.
similar thing, whether it's a place like McKinney, Texas, or LA or New York or anywhere, people tend to, once they are settled and housed within a community, they don't like the idea necessarily of what they perceive to be a less desirable demographic to be moving into their neighborhood. And I don't know how this problem gets solved, but it is definitely a problem. I think it kind of really touches on human nature, right? Um,
So
but
here's my take on affordable housing. So I mean, I personally grew up in Section 8 when I was a kid. Um,
and we
so
should mention you have experience developing an affordable housing project. So
right, yes, and that was for veterans. And so the one thing that I always tell people that don't understand about having affordable housing in their city is that it's definitely going to help out small business owners. That as far as retaining them, because if a lot of them are coming from an hour away because an hour away is cheaper to live, it can become an issue for them, wear and tear on the vehicle, time, traffic, whatever it is. And then they're just like, you know what, I can't continue doing this, right? And not like big cities like New York. I grew up in the Bronx, and so you can take the train from the Bronx to New York City, 45 minutes, whatever, but it's not a big deal. I just sit on the train and just wait and get to your destination. So unless the train breaks down, but that's a whole different story. So, you know, what people need to understand is that with affordable housing, I personally believe it should be temporary in a sense of, right, one is helping the business owner retaining great talent. And then because if you don't retain talent, you're not be able to provide the service as a business owner. And then what happens, you shut down. And that it creates a big problem for the city as
yes,
far as the economy itself, local economy.
yeah,
But then also people that are looking for affordable housing in a nice area, they should definitely look into eventually buying their own house. If you save for money and fix your credit, whatever it is, to get to purchase your own house. But that does help because there's certain jobs that don't require a degree or so, or maybe just like a 2-year degree. And definitely, but it's not enough for someone to actually uh, you know, uh, live out of unless they have an affordable housing. So it helps. it helps out a lot.
Yeah.
So
When I glance at like community Facebook pages, man,
yeah,
for the area where we live, it's just so much NIMBYism. Like, oh, another apartment being going up, or
yeah,
gosh, how many senior housing facilities do we need in this city? And like, it's all very dismissive. But to your point, I think having diversity of types of housing is super critical. And if
mhm,
you're going to have that, then you got to have public transportation, some sort of way for people to come to your city to work. So, really good points, man.
yeah. Public transportation is a whole different topic. Definitely, we should leave it on the back end, but that's a kind of get political too. So,
Yeah.
but again, so yes, there is a lot of development happening. Like for instance, in Fort Worth, I was working with a gentleman. He's a developer. Found a great location next to university, and next to the downtown area where it's developing. Everything is just being, fixed. So those are opportunities to look into with working on a developer. Let's
Mhm.
just say, hey, we're just going to build something out here. But what is the demographics? What is the need? Like does the city needs it or the area needs it? Those are the kind of like the due diligence that it takes time to look into, but it's important.
Mhm. So that's an example of somebody who is getting into the general partnership side of real estate private equity.
Hmm.
In that example with your friend, he's partnering with somebody who has operational experience in order to help him through that development process.
Right. Absolutely.
Yeah.
Yeah.
Now, from my perspective, as you know, Pedro, I got my start in multifamily. So
Yeah.
I was doing value add multifamily. The basic business model is you buy a C-class property, maybe built in the 1970s or early 80s, and it's in need of capex. It needs physical improvements. So
Hmm.
I would raise the capital from investors and also myself, and we would collectively raise enough capital to pay for the down payment and pay for a renovation budget.
Hmm.
We renovate the property, and if we do a good job of that, then people are going to be willing to pay more rent because it's a nicer property. And then
Right.
so now the property is more profitable, and then you distribute those profits to your investors, and then hopefully sell the property for a profit as well. So that's basically the value add business model, and that's what I did for a number of years.
Hmm.
So I know a lot of people in that space of multifamily investing. And there's a lot of pain, I'm not going to lie, man, in that area of investment right now.
Right.
Uh, Capital calls are very, very common. A capital call is when you invested 100 grand into this Evergreen Terrace multifamily deal 3 years ago, and it's hitting tough times. It's having a tough time keeping up occupancy and or
Hmm.
paying for the mortgage. And so now that operator comes to you and say, hey, you thanks for the 100 grand that you invested 3 years ago, but we need additional capital.
Hmm.
And if we don't raise that additional capital, we might get foreclosed on. This is happening all over the place in multifamily investing.
Right.
And there's foreclosures happening too, where even after capital calls, like there's just not enough cash, and unfortunately people are losing their investments. And so I've unfortunately personally experienced that myself.
Hmm.
But so in light of that, then why would we be talking about how multifamily or residential real estate would be a good place to place capital right now? And why would JP Morgan be talking about that? Which is an interesting question. But there's that quote that everybody knows: when
Yeah.
others are fearful, be greedy, right?
Yeah.
So I actually agree with this JP Morgan author that because there's this pain in multifamily right now, that may be exactly why it's the time to get it. Because these structural issues, like you mentioned, Pedro, 2 to 3 million estimated shortage of housing, of 2 to 3 million houses.
Hmm.
That's a big gap, right? And so
Yeah.
somebody needs to fill that.
I think I have. You and I we've been to several events, and we've seen a lot of GP syndicators, right, looking to raise capital for the deal that they have. But I think a lot of it personally is that some of them are really have been having a hard time even finding great deals. And when they find a deal, they say, well, see if we can make it work. I don't know. That's just my take based on the conversations that I've been having with some
Yeah.
of these guys, you know. So
Yeah, you're right. Deal volume is down. It's severely down, and
yeah,
it has been down for a while. So transactions just aren't happening the way they used to through 2022 or
right.
early 2022 at least. So the market is a little bit kind of frozen in a
Mhm.
way, which is there's parallels to that, right? People are seeing that in the single family market too.
Yeah.
There's houses in my neighborhood that have been for sale for like over 9 months.
Yeah. You know, what's crazy is that there's been a lot of new builds. A lot of people,
Yes.
what I've been hearing is that they're looking to sell their house and they're not going to be getting it at the price that they bought it for. So they're not, and so is an issue right now. There's a city called Prosper. Been seeing this. I hear there's a lot happening in Salina. People looking to sell the house overpriced. They bought it overpriced, and now they can't sell it at that price anymore. And
Yeah.
it's insane,
Yeah.
So
That's called a correction, and it sucks.
yeah,
It's painful.
yeah, it is very painful.
Yeah.
So yes, there's opportunities to invest. You got to be strategically and look at the location you're going to be investing in, where, why, who, who's going to, who's the type of people they're going to be buying this, either the house or they're going to be living in an apartment, things like that nature, and
Yeah.
then you make your decision if you want to
Yeah.
invest in these opportunities.
Even if you bought let's say a new build, a beautiful new home in say Prosper in 2022,
Mhm.
peak pricing. The thing is, it's not a problem unless you need to sell right now, right? So if you sit on it long enough, that thing, it will appreciate. I will bet
Oh,
on
yeah.
it, right?
Right.
We just don't know when that's going to happen, and that's no consolation to you if you have to sell your house right now.
Right. Yeah. Yeah, a lot of people are. What I've heard is looking to sell because they find a job out of state and they have to, bounce. So that's becoming a problem for those that are looking to exit right away. So yeah,
Yeah.
definitely. So
All
yeah,
right. Next topic.
let's talk about private equity,
Yeah. So we're going to shift to corporate private equity here.
corporate. Okay.
Yeah. So this JP Morgan article talks about deal multiples are starting to rise, meaning that's pricing for assets. So I'm going to share one of the charts from that article, which is
Yeah.
this. So deal multiples, right? So this is a specific sector of private equity, corporate private equity, which is growth market entry level, is going to refer to businesses that are not quite mature. They have a very aggressive growth potential ahead of them. And so
Mhm.
generally, multiples for those types of businesses are going to be higher than say a more mature brick and mortar business, for example. And then also this note that these multiples might be more reflective of tech oriented businesses as well.
Okay.
Depending on the industry, multiples are different. Tech multiples tend to be higher than, say, brick and mortar businesses. In any case, in
Yeah.
2021, almost 16 transaction multiple for growth market transactions. And then that dropped off a cliff, as we can see there. And then it is slowly improving since that point in 2022. So what that means is there's this slow and steady improvement in the values that sellers are getting for their businesses. And generally that correlates with increased volume as well, meaning not only are buyers paying more to buy a business relative to 2023 or 2022, but also generally as this expansion happens in multiples, there's generally going to be more volume as well, meaning more deals happening.
Yeah. So here's the question that I have. So to see in 2021, the multiples have been a lot higher, from what I understand. So let's say if you exit a company, bought it at a higher multiple, Man, what are their returns? Because if they're
Great question, man.
yeah,
Yeah, right. If you paid a 16 multiple on
yeah,
something and the prevailing multiple is 8x, now, uh, I mean, on the surface, that's just not good. But there's a lot of ways to mitigate that, right? Like maybe you bought it at a 16, but you've grown revenue 2x
mhm,
since then.
yeah,
You're only paying 16 if you see a significant potential for aggressive growth.
mhm,
So if you bought it at 16 and revenues are still flat, you haven't been able to grow that business, then you're in a tough spot. Like you're
mm,
pretty screwed with this deal right now. But
right,
if
yeah,
you're able to follow that business plan and revenues and earnings for that business are improving, then you're potentially fine right now. And then maybe uh, maybe you need to wait a little bit longer for multiples to come up more, but you're not
yeah.
necessarily in trouble. But superficially, just looking at this, uh, I would think a lot of companies that were purchased in 2021 are have a long runway ahead of them.
Yeah. So the key point here is also what it says growth market entry level. So for those that don't understand that, is pretty much a market where the company is going to be getting into that is going to multiply. You
Yeah.
know, maybe a demographic or a product that they're launching, whatever it is, right? That's going to be launching and is going to be expanding pretty fast. So that's typically what growth market entry level means.
Yeah. So you gave a great example earlier, Pedro, before we were on air
Yeah.
about like, let's say you have an apparel company that's doing really well, and
Hmm.
you're uh, uh, the reason you're paying a 16 multiple for that is because that apparel company is working on an expansion project where they're going to leverage that brand awareness into interior design or products for home furnishings or something like that. So that
Right.
there's a major opportunity there. So you're willing to, I guess, in a way, overpay relative to the earnings of that business because they're onto something. So
Right.
that's the sort of thing we're talking about with growth market.
Growth market. Yeah. Exactly. Yeah.
Yeah. The other piece of this is talking about public companies. So
Hmm.
IPO volume hit a major trough in 2023. I mean, that's like a historic low. That's almost matching this trough all the way back in the Great Recession in 2009. But it's not about where you are; it's about where you're headed, right?
Yeah.
The trajectory is upward. So this could be a lasting inflection point, according to JP Morgan, in terms of uh, businesses going public, more businesses going public in conjunction with the improving transaction multiples that we saw, suggesting that potentially bullish indicators for corporate private equity.
Right. Yeah. I am hearing a lot of company M&A firms that are actually saying, "Hey, we're starting to see more deal flow." So that's a good indication for both the M&A firms and also for the private equity firms, right?
Yeah,
So
and recently we just talked to Dan Olson, right? He's a CFO focused on M&A.
yes.
I know you talked to him a lot. He did. Did he say anything about that in terms of volume?
Not yet. But there's definitely he did say mention there's some talks happening as far as volume up and coming because he's actually starting to get very busy with the CFO work that he's with his firm that he's worked
Yeah.
with. So yeah,
So
absolutely.
that's a real leading indicator, man, because
Yeah,
like he's the tip of the spear, right? So if
yeah,
there's M&A activity happening, they need a CFO. They're gonna hire his firm.
right.
Um, so
Yeah.
that is definitely a leading indicator.
Yeah, and so if you're looking at investing in some private equity, look into the different industries that they're investing, right? And then a lot of them that I've seen so far are real estate, but there's other companies like Shahiro's with ZT Corporate, right? You have healthcare and you have automotive. So look into those industries, see where the trend is going. Definitely speak to the experts and be like, hey, I'm looking to diversify my portfolio. What should I look at? What's some stats that I can start looking into? So this
Yeah,
is a great example.
yeah.
So yeah.
And then, so here is an example of an industry that would be something to watch with respect to allocating, your money into a corporate deal, which would be energy and
Right.
energy infrastructure distribution, basically anything to do with energy. So this JP Morgan article references that the energy bottleneck in the United States is expected to widen, with demand growth expected to increase by 5 to 7x over the next 3 to 5 years. So the growth curve is expected to widen or get more steep. I don't have that chart available. Actually, I do. It's pretty stark when it comes to. Sorry, guys, I don't have that chart. But they in a different article they showed that the energy growth for data centers it's just going kind of parabolic. But then
Right.
energy use for everything else, manufacturing, etc., is flat after 2024. So this proliferation of continued growth and AI is going to drive massive energy demand.
So I like how you mentioned manufacturing, because that's something that is being pushed right here in the U.S. to restart manufacturing companies. And by the way, we actually have a friend of ours that is, he's focusing on manufacturing companies in Texas to help them scale and even and exit as well. But I'm very curious to see how, even though manufacturing, you said, has been flat, I feel like that's going to be a great indicator how things are going to moving forward as far as data centers, because there's a lot of moving parts. There's a lot of subdivisions that they need as far as hardware to develop these data centers.
Mm-hmm.
Even energy as well. So
Yeah.
yeah.
So my wife works in manufacturing, food specifically.
Okay.
And first of all, the tariffs are having a massive impact. They're having to rework a bunch of deals because the pricing
Wow.
is now different.
Yeah.
And I have another friend who, based partially at least, or significantly based on, due to the impact of tariffs, he had to lay off half his team. So there's definite business impact of these tariffs. But here's the challenge, as I see it, is nobody knows whether these tariffs are going to stick, right? And so in an uncertain world, introducing more uncertainty just kind of freezes business activity and investment activity, because if a manufacturing company is thinking, okay, due to these tariffs, are we or are we not going to spend $300 million to build this manufacturing facility?
Mm-hmm.
Well, if you're going to make that kind of investment, you need to be damn sure that that tariff is going to stick, right?
Mm-hmm.
Otherwise, if there's a chance that the tariffs will disappear, then why would you spend $300 million to build a factory, right? The reason you're manufacturing in Mexico to begin with is because it's cheaper to do it there, you know?
Right.
So it's a challenging environment.
Yeah, there's a lot of uncertainty for sure. And I always say, let's hope whenever there's a shakedown, how we say in the military, shakedown, you have to do a reset. It takes time to get everything, accommodated and everything, how we say it to us, well, in the military, dress right dress. But let's see, it's going to take some time. There's a lot of things that we don't even know what's happening, and it comes into light in the news, right? So taxes to layoffs and everything like that. So with that being said, we hope there is definitely going to be a good momentum moving forward as far as like investments and opportunities to get into. But looking at the data, definitely is gonna be great for us to start continue diversifying.
Mm-hmm.
So yeah, so
right.
definitely.
Okay,
So all right,
you
guys.
want to take us out, man?
Yeah, definitely. So listen, guys, so little things like this, it's articles that we come across, we're going to be talking about just to educate you guys. And we want to educate you or talk about things that we understand. And so there's certain things like energy, we don't understand that. So if you're in the energy space, you're building something, whatever it is, let us know. We would like to have you on a podcast because we want to understand more of that industry and also educate our community about, energy or any other things that, say, hey, look, a lot of people don't know about this. And definitely here's some information that you might want to look into. So we'll read it and we'll go from there. Other than that, guys, thank you so much for subscribing to our channel, subscribing to our newsletter. We really appreciate that. Thanks for the support. Thanks for those that have been supporting us coming to our events. We really appreciate that too. So anyways, if you haven't, and this is your first time watching us, you haven't subscribed to our channel, please do so. And also subscribe to our newsletter. You're going to definitely get a summary of everything the guests that we talk to. Is a 3 to 5 minute read. When you don't, because obviously you don't have time to watch the entire thing for 30 minutes. Any, YouTube podcast that we do, but definitely we'll give you a summary of that. And also any current events that we're having, like the events that we have locally, or, friends of ours that are having events as well. So we do intimate investor groups, events, at a cigar lounge, whiskey, one name it. There's a lot of different things that we do. So anyways, guys, thank you so much.
We're trying to be cool people.
Yeah, we're trying to be different.
We're trying to be cool people that you're going to want to hang out with.
Yeah, absolutely. Absolutely. Hey, we are cool. We are cool. All right, guys, stay tuned till the next one. Take care.